Hello guys, and welcome back to another video at the Capital Traders Group. Now in this video I'm going to show you how to refine your zone to help you increase RR, which is very important as you get much more accurate entries. And secondly, tighten your stops, which will basically allow you to risk the same amount, but at the same time you'd be increasing your reward significantly. So keeping your risk the same but increasing your reward. Now say for example you have a setup of 1 to 3R. Now, even if you can increase your R or your return by 1 or 2, this will have a much bigger impact on your trading over a long-term period, right? It will have significant impact on your gains and your returns, and that doesn't even take to effect what compounding those extra gains. So yeah, it can accelerate your trading just vastly just by using these simple techniques. So I'm going to go ahead and take a look at a setup which took place on Friday on Euro USD. Now the reason I'm doing this is because I want to take a look at the most recent price action data to show you how this information can be utilized in current market conditions. Okay, this is a technique that I personally use as well as teach to members, and I'm going to show you here now for free. Now this technique can get vastly more advanced, but obviously I'm not going to delve into that part, but I'm going to show you the basic way I can display it so you guys can understand it well. So let's take a look at Euro USD. Now here, what do we see, right? We see price come down, take this low here, right? It takes this pivotal low where stops would likely be placed before it takes a significant structure point on the 4 hour, which means we are bullish on the 4 hour structure. Okay, so let me just illustrate that for you here. So we have a breaker structure, but what we have here, right, is the low is taken before we see a structure break. Okay, so this is a very pivotal point, and this is a zone where I would likely look at buys from, because we saw that structure break here, which means the buyers are clearly in control. And then we have this push down in price where I'm anticipating price to come down lower into this zone here, which if I just mark it out right here, right, this is my pivotal structure point. There is a few reasons why, but mainly because I'll give you a little tip why, is because we hunted those stops here on the left, okay, and price pushed up higher. Okay, so this is a very pivotal point. So if I was, say for example, a swing trader, I'd understand this is my main demand zone I want to look at for taking buys, whether I want to place a limit order here or I want to wait for confirmation entry. However, which way you trade, depending on your plan, that's upon you. But if I was a string trader, this is where I'd look for my entries, and basically I'd look for my minimum target would be here, right? For this wick to be filled. Why do I say that wick be filled? Because on Friday we had NFP, and on Wednesday when this wick, this heavy selling pressure took place, it left a big wick, right, on the 1 hour time frame as well. And usually if you backtest this enough, wicks always get filled, right? It leaves a price inefficiency, which I'll cover a little more in depth shortly. But in essence, the market needs to offer a fair market value, and when it shows these flash prices, more often than not, price will always fill these zones. Okay, so I know that if I'm going to take this long, right, from this valid zone, I want to come up to take this wick at least, or you could take it to come at least to fill the higher zone of this wick. I would likely take it to the wick, because I believe, because of the 4 hour we took that structure point, I believe we are going to come a lot higher. So yeah, so manipulation took place here before we saw that breaker structure, so it's a prominent demand level. Okay, so let's see how price plays. Right, comes into the zone, we see a reaction, and then we see price push up higher. Right, now this trade offers a RR of 2.76. Now me personally, I wouldn't exactly take this setup, not because it's not high probability, just because my setup does not allow me to take trades that are less than 3R. It's just what my plan dictates. So I wouldn't personally take that trade. But that's pre-refinement. So this is before any refinements. So why don't we go ahead and dive a little deeper into price to try to refine our zone. So let's go back. And let's zoom in on price. Let's move this out the way so you guys don't forget why we chose this zone. Okay, let's go back a little bit and let's dive in a little in depth more in price. So let's go on a 30-minute. Let's go 15. Okay, and let's dive a little more deeper. So now we understand this low, right? Let's mark it out here. This was that prominent 4-hour structure point that was taken. Now, if you guys can see, which I'm gonna just mark the zone out properly, what do you see here on the left? Now, I've mentioned this this before, but from my one of my other videos. But what we see here is an advertisement of liquidity. We see congestion, right? We see price consolidate, right? We see it range here, right? We see it range, and then we see it. What does it do? It ranges, which is additionally what you call it accumulation, before it manipulates and takes that low. So advertises traders to get involved because it's still at a prominent demand level on the higher time frames. And then what does it do? It runs their stops and it takes the low. Okay, so price manipulates them, comes down, takes that, and then takes the 4-hour low, which is here, right? This is the prominent. It wicks down, collects all that liquidity or all those stop losses, and then it pushes up higher. But what do we see here on the right? We see a clear price inefficiency. Now, remember where I talked about the wicks get filled? Now, this is mainly to do with price inefficiency. So what you'll see in the market is the market needs to offer a fair market value. So when you see these volatile pushes in price, right, where we see this big candle where there's no wick fills within this candle, which means there's no wick fills within this zone. There's just a clear one-sided push of buying strength. Now, in the currency market being so hedged, well hedged it doesn't usually do this. It usually comes and fills the zone most of the time. So whenever it leaves a zone like this, you have to understand that price will come back to the zone at some point in the future to fill it. So when you understand that, well, I'll illustrate here, you'll understand that this is a clear price inefficiency, right? If I mark it out in, let's highlight it, right? This is clear, right? Price inefficiency. The market is going to fill this zone in the future. So what I can do is if I understand that information very well, we understand the manipulation took place, and then that's when the real buying power came in, or those buy orders took place, which caused the big volume and price inefficiency. We can refine that zone down to where that price inefficiency starts. To understand that is very highly probable, and if you backtest this enough, again, I recommend you do that so you can see for yourself that price will come back to this zone in the future. So now we've refined our zone back down to this zone. Let's push up on the higher time frames, right? And we understand that this zone is still prominent. Again, understanding that price is going to come back now to our new refined zone, I can either leave a limit order here or wait for confirmation entry, again, depending on which way you trade, and keep our stops at the same place. Because remember, this is the invalidation point, right? This zone is where the low was taken before the structure break. So if price does come below this zone anyways, then the setup is invalidated regardless. But now we have refined our zone further down, okay, and understood that price is going to come back higher. If I let it play a little bit, right? Let's just forward it. Okay. Right, we see that consolidation. Price comes back. We stop here. Now to see price is going to come and fill in that wick there. So that's my target. Again, let me mark this for you just so I can illustrate it better so you guys can understand what I'm exactly looking at. We can understand that price is going to come and fill in this wick zone here, right? This big wick. Let's mark it red so you guys can see it a little better. So I understand that there's an inefficiency on the high time frames here that left this big sudden one-sided bearish push. Again, it's going to fill that wick. That's what we're targeting. But now we've refined our zone. Let's see how price plays. Comes into our zone, right, and then makes that push to come and target. Now we have effectively, just by using that simple technique of price inefficiency, we have refined our zone and increased and basically doubled our previous R, because our previous R setup was 2.6 or 2.7, I believe, and now we've basically doubled it, so 4.65 R. remember, we're risking the same amount, but we've doubled our reward just by refining using this simple technique on this setup. Okay. Okay, now I've explained this simple technique. Now I'm going to refine this zone even further. So let's get rid of this. Right, we've doubled our R just by using that technique. Now let's refine our zone even further. Let's go back a little bit, back to our zone, and I'm gonna show you guys something else. Okay, remember these guys, these are some gems. So if you are enjoying this video, please do give it a like. If you want to see some more stuff like this, it would be very much appreciated. So now I've explained what price inefficiency is, right? A one-sided move in the market, and usually these zones are filled, as we just saw. Now a further refinement, which you can use, is see what will a lot of the times happen is price won't always come back and fill the full imbalance zone, right? It doesn't need to, but what most often it will do, so it won't do something like this, right? It won't fully fill the zone in, but what it will do, again, because the market has to offer a fair market value, it would usually at least come and fill the 50% of that imbalance zone before continuing on with its intensive move. So what I like to do, right, which is something I also teach, is I like to put a 50% zone on the imbalance, right, on where the price has left that price inefficiency. So if we scope back on the higher time frames, so now understand that the market will more often than not, again, go and back test and see this for yourself, it will come and fill at least 50% of that inefficiency. Okay, so again, if you, depending on how you like to trade, whether it's confirmation or limit orders, I would then place the order at the 50% level, because remember, we're at the same zone, but we just refine it down at the 50% level of, not of the complete zone, just of the inefficiency that was left behind, right? And then the stops, again, at the same exact place at our invalidation level, right, where the manipulation took place of the low before we saw a structure break. Okay, and then you guys, well, if I let it play out a bit, right, we have the structure break, and then you see price come up and then leave that strong wick where we are going to target here. Okay, remember, same zone, same SL, same invalidation point. We just refine the zone to 50% of the inefficiency level. So let's see if price plays to it. There you go, right? Came back, tagged us in at the 50%. Look, it came right into it didn't fill the whole zone. It came down to the 50% level of that inefficiency, as it does most times, and then pushed up to take that wick we targeted. Now we've increased our R again by another 2R, right? Just by using that simple technique. Remember, the setup is the same, but all we've done is refine our zone, risking the same amount, and significantly increased our R by using these refinements. Now, I wanted to make this video brief, so I'm going to cut it short here. So if you guys did like this video, please give it a like and subscribe. And if you guys do want to learn how to trade seriously, I will be releasing a mentorship program coming in the future. More details will be on our Instagram, but it will be limited, mainly because I want to focus on quality, not quantity. So more information will be on our Instagram, so make sure you're following that. But if you guys do want to find out about any of our analysis services, link will be in the description down below for all of that. But if you did like this and did find value, please like and subscribe. It would be very much appreciated, and it will also give me motivation to make more videos for you guys, so I know that you guys are actually enjoying them. So with all that said and done, I hope you guys enjoy this video, and I'll see you on the next one. Bye bye.